Hello, last week we finished up the accounting cycle. This week, and this is the last chapter for the semester, we are going to talk about accounting for cash. What are some of the accounting things and transactions we have to do when it deals with cash? Cash includes currencies, your checking account, checks received from customers, money orders, bank, um, and bank cashier checks. Cash, obviously, we know plays one of the most important roles in operating a business, and you have to control it. You have an internal control, which is policies and procedures that are designed to ensure you have proper accounting procedures and transactions. All cash should be received and deposited daily in a bank. All disbursements, except for payments from petty cash, should be made in check. Two people should sign checks. You should have one person doing accounts receivable, one doing accounts payable, not the same person doing both. The U.S. Patriot Act put in the customer identification program that provides clear identification of every bank holder. Each person authorized to sign checks must complete and sign a signature card at the bank. And this is an example of it. We probably have all done that at one point in our lives. They talk a little bit about making deposits, having a deposit ticket. Businesses will go to banks and deposit all their money on a daily basis or weekly basis, however it lists out. Talk about endorsement for businesses. Most of the time, businesses have an endorsement that's a stamp, or it comes out of the computer and is endorsed that way. But usually there's some type of a stamp or something that's on there. We know about ATMs. I'll let you kind of read about that. We talk about writing checks. You guys probably all know this process of writing checks. Bank statement, knowing what canceled checks are. It's very important to reconcile your bank statement when you are a business. Even here at MTI, they're always reconciling our credit cards to make sure we have receipts for everything that's charged on the credit card. They also reconcile the bank statement. These are very important things to do. We may not do them personally, but in a business world, you need to do them. So we talk here a little bit about bank reconciliation. They just kind of talk through each step of it, shows you example. And I'm just going to let you guys can go through and kind of look at that. Some of the stuff is things we've already talked about, or things that you know because it's what you do all the time. When we talk about deposits in transit, that means that it's a deposit that we made, but it maybe has not been recorded yet. Maybe you made it at the end of the day and the bank hasn't brought it up yet, or it was made before the bank statement. You did identify errors. Obviously, you need to let them know if there are any errors right away. Like with this one, they said it was supposed to be 98 and it was 90, or if it's supposed to be 1988 and it was 1998. All those kind of things can happen. And so you just need to make sure things are right. Mistakes can be made even with the computer doing it. And so let's talk about outstanding checks, checks that you have written or that have not gone through yet. This could also be debit payments out of a debit card or things like that that just haven't gone through yet. There could be some additional recycling items. You can add items added to the account by the bank are credited memos, and they're deducted from the bank. They're debit memos. So it might be like an ATM charge or a withdrawal or something like that. Okay. As you go through non-sufficient checks, bank services, all those kind of things are subtracted from your balance, and then you have your, they should equal. You do need to journalize this. Usually if, like it says, we know that the actual cash amount is 2,093, but the general ledger says that the cash is 2,393. We need to do a journal entry to show that difference. And that is, usually there's two kinds of items that appear in this. One is an error, or usually it's additional deductions. Those bank service charge, things like that we don't think of. You need to put those in your journals. Here was an error on one check and then a withdrawal, unrecorded withdrawal. So they kind of talk to you about the journal entries, what would be going through, but a lot of times they're miscellaneous expenses. and like the cash service charge, the unrecorded non-sufficient check, we got to put that in accounts receivable and back into cash. We also have electronic banking. That's what a lot of us do. Employees are paid usually through electronic banking. Sometimes your bills from your suppliers can be paid that way. Payments from customers are frequently electronic form to pay online. So this is something that is becoming even more of a prominent area of banking in the business world. We do have a petty cash fund. The petty cash fund is for small purchases. It's usually $300 to $500. A lot of times businesses will have $100 to $200, $300 sitting in their a lockbox or safe or something. What this fund does is it allows you to get money for certain things, small things that come up. Maybe it's a $20 item that you need to go purchase at the store and you don't want to have to issue a check for it. You come back, you can do it, come back with your receipt. To establish a petty cash fund, you just take money out of the cash and you put it into an account called petty cash. The transaction will be like that. And then anytime you use the petty cash, you're going to create a voucher. It says who's the namee, what was the purpose, and how much was paid, and the count, like postage expense. Then you're going to you're going to have to end up doing a journal entry for it, and a lot of times to replenish the petty cash fund. And when you do that, then you want to be able to identify, was it entertainment expense? Was it postage expense? Was it delivery expense? What exactly was that expense? So you may end up having to have quite a few entries or quite a few debits and then one credit into cash. Like this example, to replenish the petty cash fund, they had automotive expense, postage, travel, entertainment, miscellaneous, drawing account, and then they have one credit amount of cash. So what that does basically is that takes that records that all these expenses were there. So the automotive expense for $40.80 now claims that we have that automotive expense for that month. And it takes $188 out of cash and puts it back into your petty cash fund. You can change the fund. At the end of the day, the cash received during the day is deposited, but sometimes your change fund is held back. And a change fund works a lot like a petty cash fund. You have a change fund and the cash, and then you're going to have to sometimes reimburse that and record that yourself. We also talk about cash short and over. Sometimes the cash in our drawer does not equal what our sales says. So in this example, our cash in our drawer was 1,161. We always keep 200 back in that account. So really our sales for the day was 661. Our cash register tape says it was 663. So that means we have a shortage of $2. There's $2 that is missing somehow from the cash that's in our drawer to what our sales receipt says it should be. Your cash, when you do a cash short and over, your cash is always the first line. Your fees is the third line. And then you're going to decide your cash short or over, whether it's a debit or credit, depending which of the cash and the service fees is the highest. You want to try to make them the same amount. And if it's over, then it would be on the other side. As we go through this, I'll talk about having cashiers at the end of the shift. They have to recount their cash several times to compare it with the register tape. A lot of times that's calling auditing it. If there's any shortages or overages, it's extremely important to make sure that they know that. If you think of a business like Walmart or Shopko or a county fair or something, it electronically says how much cash should be in there. So they really have to check it over and over again to make sure the right amount is there. So hopefully this, even though it was kind of quick, there was a lot of information, and I hope it helped you understand accounting for cash. Again, this is our last chapter we will be doing this semester. If you have any questions, let me know.